Key point 1. Navigating financial waters. Welcome to Finance 101, a cornerstone of personal and business success. This summary is your compass to steer you through the snags of financial statements, cash flow, and key financial ratios. Navigating the complexities of financial data is more of an art than a science. You must learn to look beyond the numbers and their limitations to understand the story they tell and the chapters they leave untold. Explore investment opportunities, working capital, and its cost, the critical element driving every business, big or small. Additionally, setting financial goals, monitoring performance, and implementing corrective actions are other essential practices for a successful enterprise. Continuously evaluate the efficiency of your financial operations. As a result, you'll become skilled at conveying financial data, which involves illustrating figures and crafting a narrative that engages stakeholders. So, take control of your financial journey, and let this summary be your beacon, leading the way to financial understanding and empowerment. Key point 2. On financial literacy. Understanding finance might seem overwhelming, yet it's crucial for achieving personal and business success. Let's simplify some fundamental concepts to make them more understandable and practical. To start, consider financial literacy. Picture yourself running a lemonade stand. To calculate your earnings, you must subtract the expenses for lemons and sugar from your revenue from lemonade sales. This simple scenario emphasizes the importance of understanding basic financial concepts to make intelligent business and personal finance decisions. It's also a practical way to grasp the basics of budgeting, calculating costs, and understanding profit. Now let's delve into the core of financial comprehension, which revolves around balance sheets, income statements, and cash flow statements. These are like a medical checkup for a company. The balance sheet offers a snapshot of your financial status, detailing your assets, what you possess, and liabilities, what you owe. For example, if you have a car and a corresponding car loan, the car counts as an asset and the loan is a liability. Conversely, the income statement is more dynamic, like a continuous recording rather than a still image. It tracks your earnings or revenue and expenditures or expenses over a set time frame, such as a year. For a freelance graphic designer, the income from projects would be revenue, while ongoing costs such as software subscriptions and office supplies count as expenses. Starting a business is like going to school all over again. The cash flow statement is vital, especially for small businesses, since it keeps track of cash inflows and outflows. Let's say you sell lemonade on credit to many customers, which means you trust that your customers will pay you later. Your income statement may reflect substantial profits, but you could still be short on cash to purchase additional supplies. Ultimately, grasping business principles is much like learning the rules of a game. These principles encompass supply and demand, risk versus reward, and the significance of investing and innovating. For instance, if you observe a strong demand for organic lemonade in your area, you might decide to invest in organic ingredients despite their higher cost, anticipating that this will draw more customers and boost your earnings. Every manager, no matter where he or she sits in the organization, should have a solid grasp of the basic statements. Karen Dillon. Key point 3. Those scary numbers. When it comes to business expansion, knowing how to use financial statements, optimize operations, and effectively use assets is essential. Let's explore these ideas further with tangible examples and advice. For starters, assessing a company's health is more than merely examining figures. It's about accurately interpreting them. Financial statements act as a report card for a business, indicating its performance and solidity. For example, a firm's balance sheet may indicate a strong cash position, yet a detailed examination of its debt-to-equity ratio might show a heavy dependence on borrowed capital. Such analysis is crucial for making well-informed choices, like deciding whether to invest in new technologies or reduce expenditures. Improving business processes is an essential tactic for boosting profits. It involves not just working harder, but also working smarter. For instance, a small bakery can enhance its profitability by expanding its pastry sales, optimizing its banking timetable, reducing waste, and securing more favorable terms with its suppliers. Streamlining operations through automation, such as inventory management software, saves time, reduces errors, and allows the staff to focus on producing delectable baked goods and providing excellent customer service. Quality is always better than quantity, especially in business. Utilizing assets effectively is a crucial strategy for fostering business expansion. Assets include not just tangible items like machinery or real estate, but also intangible assets such as brand image and customer relationships. For instance, a landscaping business could use its fleet of vehicles for more than just providing services. It could turn these vehicles into mobile billboards with eye-catching branding. Additionally, a company's strong reputation for quality service can provide leverage to negotiate better terms with suppliers or to establish profitable partnerships. In conclusion, the financial health of your business represents more than just its current state. It serves as a guide to future possibilities. Businesses can lay the groundwork for sustained growth and profit by thoroughly analyzing financial statements, enhancing operational efficiency, and creatively using physical and non-physical assets. These strategies are adaptable and suitable for a wide range of industries and business sizes, from small local shops to large global enterprises. Key point 4. Need that dough. Understanding your business's profit and cash flow is crucial for sustainable growth. It's essential to recognize that profit and cash are two separate things. While profit is an accounting metric that results from subtracting expenses from revenue, it doesn't necessarily indicate how much cash is available. For example, a company may report profit in its income statement, but struggle to pay bills if its revenue is tied up in outstanding invoices. Hence, it's vital not just to generate profits, but also to manage cash flow adeptly. The significance of cash in any business cannot be overstated. It's the lifeblood of business operations, crucial for daily activities like paying employees, buying supplies, and keeping the business running. Many companies, especially startups, face cash flow problems despite showing profits on paper. To illustrate, a tech startup with substantial sales revenue might experience difficulties meeting its immediate financial obligations if customer payments fall behind. Additionally, a thorough understanding and management of your balance sheet is essential. The balance sheet provides a broad overview of a company's financial position, listing assets, liabilities, and equity. Managing these elements wisely can improve cash availability and overall financial stability. For example, reducing stock levels can free up cash, and renegotiating with suppliers for extended payment terms can delay liabilities payment without depleting cash resources. In concrete terms, companies can enhance their financial standing by accelerating receivables, funds due from customers, effectively handling inventory, and managing the terms of payables, debts to suppliers. In this case, a retail outlet could incentivize early payments from customers with discounts, employ a just-in-time inventory system to cut down on storage expenses, and negotiate extended payment terms with suppliers. Grasping the subtleties of profit versus cash, recognizing the importance of cash flow, and strategically managing balance sheet components are essential to successful business operations. These concepts empower informed decision-making, ensuring profitability, liquidity, and long-term viability in the competitive business landscape. Establish an emergency fund to cover unforeseen expenses. Did you know? Many of the world's most successful businesses, including Apple and Amazon, started in garages. Cases like these illustrate the potential of small beginnings leading to outstanding achievements in the business world. Key point 5. Business is in the tools. To thrive in the dynamic business world, mastering the working capital model, understanding return on investment, or ROI, and employing practical management tools are essential for success. Nobody is getting approval to spend money these days unless he or she can demonstrate an economic return. John O'Leary. First, let's delve into the working capital model using a case study. Consider a small clothing store. This model involves managing cash flow to address operational expenses, such as buying inventory, paying rent, and fulfilling payroll obligations. The store needs to balance its receivables and payables effectively. For instance, the store can sustain a healthy cash flow without external borrowing if it can secure extended payment terms with suppliers and ensure rapid customer payments. Next, understanding and effectively communicating the concept of return on investment, or ROI, is crucial in business. ROI serves as a key metric to evaluate the efficiency and profitability of an investment, providing a gauge for the success of your investment decisions. Consider a restaurant that implements a new online ordering system. Calculating its ROI would involve comparing the revenue increase from online orders with the cost of implementing the system. This metric is invaluable for businesses in optimizing resource allocation for the best possible returns. Lastly, having practical tools for decision-making is vital when it comes to business operations. These tools range from financial ratios and budgeting templates to forecasting models. For instance, a construction company might use project management software to track the costs and timeliness of projects, ensuring they remain within budget and on schedule. Financial ratios like current or debt-to-equity ratios are crucial in assessing a company's financial health and making informed strategic choices. You can predict anything, you just need a proper tool. Understanding your working capital model is essential for maintaining healthy cash flow, which is vital for daily business operations. Mastery of ROI terminology enables businesses to make intelligent investment decisions, ensuring that resources are maximized to their full potential. Moreover, employing practical tools is instrumental in aiding strategic management choices and guiding businesses toward their goals. These concepts are crucial in various industries, helping companies navigate financial challenges and capitalize on chances for growth and success. Key point 6. Keep your business healthy. Running a successful business requires more than just interpreting financial statements. It involves recognizing potential oversights and typical pitfalls in measuring performance. Let's discuss these common pitfalls. Even though financial statements are crucial for evaluating a company's financial health, they don't paint the whole picture. For example, they may not fully reflect a company's competitive edge or the strength of its customer relationships. A business could show impressive sales numbers, but if these sales rely heavily on just one customer, there's a hidden risk that financial statements might not immediately reveal. Similarly, although a balance sheet may display considerable assets, it doesn't necessarily indicate their real-time market value or the company's capacity to quickly liquidate these assets if needed. No cash infusion can save you if your human resources are exhausted. Another common pitfall is prioritizing short-term gains over long-term viability. A company might reduce its research and development spending to increase immediate profits, but this strategy can detrimentally affect its future competitive edge. There's also the danger of misreading data. Similarly, a sharp rise in sales might initially look promising, but if it's the result of a one-off bulk order from a client, it may not be a reliable indicator of ongoing growth. The fourth issue is the use of unsuitable benchmarks. Drawing comparisons between a small, specialized business and a large, multifaceted corporation can yield inaccurate performance assessments. The fifth and final trap is failing to update measurement criteria in evolving business environments. Metrics that were relevant 5 years ago may no longer be applicable today, particularly in fast-changing sectors. So, while financial statements are inseparable for assessing business performance, they have limitations and must be complemented with additional forms of analysis. Recognizing typical errors in performance evaluation can assist businesses in steering clear of skewed perceptions and making more well-rounded decisions. Combining financial metrics with a thorough grasp of the overall health of the organization and the nuances of market trends is crucial for sustained success. Conclusion. Developing skills in finance is crucial for achieving business success, much like using a compass is essential for navigating a ship. As a dedicated explorer of the financial landscape, you have journeyed through everything from understanding the basics of financial statements and cash flow to making wise financial choices. You've learned the importance of acknowledging the limitations of financial data. Armed with this knowledge, you now possess the analytical skills and sound judgment required to interpret the complex language of finance. As a financial decision maker, you have developed skills in evaluating investments, managing working capital, and evaluating various financing options. Your voyage has also provided you with valuable insights into budgeting and forecasting. Furthermore, you've gained an understanding of capital structure and financing options, which are vital for setting achievable goals and monitoring performance, critical factors in maintaining the financial health of a business. You're now thoroughly equipped to navigate the challenging waters of the business world. Now raise the anchor. It's time to set sail. Try this. Review your financial statements monthly. Practice interpreting key financial ratios. Set clear, measurable financial goals. Regularly update your budget and forecasts, and communicate clear financial updates to your team.